Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is June 28th edition of Market Outlook. Don't forget to sign up for this and get it for free every week by going to www.marketgauge.com. Okay, so more of the same. The Greek drama continues to overhang the markets. A little bit of optimism runs it up, a little bit of pessimism runs it down. It looks like the negotiations are bogged down, but a lot of this is probably digested in the market. We'll see. Obviously, I think the scenario could be a non-default default where terms are extended or modified, but yet there's not full payment. So yet more of the same, which this thing has been dragging on for years with multiple deadlines. None this quite as severe, but nonetheless is basically muting any big movement in the market as such. But anyway, there are wild cards out there, and the black swan or the golden swan could occur at any point in time. Let's be prepared for it. So, first of all, IWM, we had a really nice breakout. This is the leading index right now, probably in the world in terms of stock market indices. Take a look at this. We broke out from this sideways action that was occurring basically all year and tested the highs held on Friday, closing above the 10-day moving average. And basically, we had penetrated outside the bands, came back in, and held this 10-day, which is a pretty good sign. Now, one point of caution: if we take out Friday's lows and start attacking into the top of that sideways compression zone, that could mean that the rally here is potentially failing. And of course, you have this short little trend line, which is a big help here, which coincides with that 50-day moving average. So we really don't want to see that attacked. And if we start eating into that support zone and take out that trend line, obviously that's going to portend trouble in the overall market. Little different story, or a significantly different story in the spiders. Man, we've really been in sideways action. It looked like, along with the IWM breakout, that we might really look pretty good and start to travel, but the market failed yet again. It's in the meat of this upward channel here, right? So clearly, the 200-day sloping up, well intact. The trend is intact longer term. Intermediate to shorter term, we've now closed under the 50-day moving average for a couple days, but we're waffling through it, so you can't put all that much meaning. I'm looking more at this overall channel here and the 200-day. Any decisive move above this channel here with some real gusto, some good volume, would be an indication that we're breaking out of this sideways action. Meanwhile, just more of the same. So it's frustrating for trend followers. On the other hand, if you're a pure scalper and a fader, this is your market. Let's take a look at sentiment. Volatility ratio. We touched just above or at the a little bit of a frothiness reading earlier in the week, which rewarded us with a little bit of a sell-off so far. So meanwhile, we're back down to where the sentiment has been about as oversold as it's been in the last 2 or 3 months. But again, that's not an extreme as we've worked through this whole compression zone. So not much to read right here. But again, if you get beneath this recent level here, you'll probably attack and mean that the market is under continued pressure and get down to just above that 1 point level, which would mean that the market on the downside has run its course. But meanwhile, we're still in this neutral zone, which coincides with where the overall market is. On an absolute level, volatility dropping at the lower end of the Bollinger Bands. Again, generally speaking, that is good for at least a minimum of a continued sell-off, maybe another 1%. There have been a couple of cases where the Bollinger Band has broken down, touched to the bottom of it, indicating extreme frothiness. You can see this right here, and you do get a significant sell-off. But that's only happened on a few occasions as we've drifted down through the lower ends of the Bollinger Bands. A little bit of a rally in the index here, the VIX, but small sell-offs in the S&P. However, there have been some significant ones over the years, but statistically speaking, these have just resulted in some small short sell-offs. Let's see what happens, and definitely let's keep an eye at the upper end here where the Bollinger Band and the 50-day moving average of VIX is coming in. That would definitely be an interesting point to watch. That might indicate a potential change, significant change in sentiment about the market and the resultant sell-off that a lot of people are expecting. Taking a look at the McClellan oscillator, not much to say. We did get to an oversold condition earlier in the month, not all that well confirmed. And again, what you can see here is that the breadth is just getting narrower and narrower, right? Basically, we're in a neutral reading. We really couldn't get going here. And as you can see, market is just sideways, more and more compressed. Could it go on this way for quite some time? Absolutely. But we have to stay frothy and watch that channel that I had pointed out in the beginning of this presentation. Let's take a look at the bonds. We'll work back from the monthly charts. Look at this. The monthly charts, couple things. Not quite oversold, but getting pretty close to being oversold on the monthlies. You can see we had some pretty good drops on a monthly basis, and our shorter term moving average on the monthly charts, which is really a long-term indication, we're touching down and close to being oversold. So not quite fully wrung out. And one thing for sure is that the longer term trend, we closed under it, under attack. That's the super long-term trend on monthly charts. Again, we're still within this channel, and the very, very, very long-term trend of rates heading down is noted by this green line, right? That's the 80-month. It coincides with the longer-term economic cycles. That is still intact. However, on a shorter-term basis, of course, the shorter-term time frames have to break down first. Now, what's interesting, the 200-week moving average, right? This is about 4 years worth of data. We haven't been closed under that 200-week moving average in quite some time, since the early part of 2014. And we have closed decisively under that. So that is quite interesting. A lot more room to sell off as well on the weekly charts. As you can see, we're only at a 14 on our RSI indicator. So definitely the intermediate term trend, weekly charts we consider intermediate. We're breaking down on the key moving averages. However, let's take a look at TLTs on the bonds on the daily charts. You can see we have a very nicely defined down channel. We're not nearly oversold yet. We closed at the very, very bottom or the lows relative to, again, well over a year to a year and a half ago. And it looks like that the lower end of the channel would come in right around the 1350 level or so. So that would mean a penetration of the lower end Bollinger Bands as well as the channel and a lower RSI. So we get a sell-off down to these lows would probably be a good opportunity if you're short here to take some profits, and also be cautious, wait for a bounce to potentially sell, as this is getting pretty wrung out on the downside. But nonetheless, we are in a bear phase on the dailies in interest rates. Market clearly could respond to that as well. That's quite a bit of pressure. Let's take a look at some of the weekly ratios on some sectors. First thing, SMH is definitely breaking down here. It had touched it on a relative basis to the S&P. On an absolute ratio basis, the semiconductors got right up to its highs back in 2006 and is now selling off and breaking down under that ratio moving average. So definite a breakdown there. Other very weak sectors, IYT continues to really get pummeled. Look at this, the acceleration on this ratio chart and the moving average just sharply moving to the downside. Again, closed very weak this week. Definitely cautionary for those who are Dow theorists. Transportation, key ingredient in measuring the economy, and that is not doing well and continues to move lower. So definite warning signs. On the other hand, financials. Let's take a look at the financials. You can see, right, we moved nicely up above that weekly moving average of the ratio. We closed pretty well for the week relative to a down week overall in the S&P. So you can see slight up move in the financials with a down move in SPDR. So pretty good relative action. That's where the money is flowing at the moment. KRE, something that we've been in our portfolios, closed basically on new highs. Look at this breakout. Obviously, regional banks liking the prospect of higher rates. So we closed on new highs on an absolute basis in KRE since, well, going back to 2009, before the financial crisis. And again, the ratio starting to pick up here as well. Now, two other hotspots. Home builders, XHB, which is not exactly home builders, but sort of related things to furnishing a house, things like that, and yes, building a house as well. And you can see home builders definitely picked up this week. Here's the price action in home builders. There's the price action flattening to down in the S&P, that ratio moving up. So signs of strength. Home builders, financials, and of course, with the ruling on the Supreme Court about Obamacare, cure, biotech, and healthcare moving up sharply. Look at this, basically closing on new weekly highs, and again, the ratio improving. So signs of strength, biotech, healthcare, financials. Weakness, obviously, trannies and utilities, and the semiconductors as well. Well, I hope this helps. Stay frosty. Definitely this sideways compression action, the longer it builds, the bigger the pressure and bigger the buildup. So let's see what happens with the Greek drama playing out, if that has any lasting effect. And stay frosty on those, watching those bonds, because that's going to be another key important indicator as to which way this is going to move out. These markets are going to move from this sideways compression. Thanks. Bye for now, and see you next week.